Market today. Stan Shamu from IG in Melbourne joins us now. Stan, more data from China and Japan today. What can we expect in the forex space?
Yeah, well, of course, all week we've seen most of these currency pairs relatively range-bound. Yesterday, obviously, was the trigger for risk, and that China data really did give a bit of a kicker to the Aussie dollar, breaking out of that range. The top end of that range at 1.052 came just shy of 1.06. But basically, we can actually round it off to a high of 1.06. In terms of the euro and the pound, they were lagging through Asian trade ahead of their central bank decisions. But eventually, we did manage to get them join into that risk rally. Of course, the US dollar came off quite a bit as well, so that did help. In terms of the US dollar, those unemployment claims, missing expectations, really did support the notion that the Fed might be around for a bit longer than they want to. At the same time, Mario Draghi's comments following that ECB decision to hold rates were quite encouraging. Of course, there are still a lot of problems surrounding the Eurozone, but for now, I think he's appeased investors and calmed some of the concerns that everyone's had about the Eurozone for a while now. Although he does see a little bit of growth kicking in towards the end of the year, I think we'll probably end up seeing a situation whereby the euro is sold into the rallies should any of the data that's coming up soon show signs of disappointment. The dollar yen is perhaps the interesting one to watch today. It was pretty steady, just above 88 through US trade. And that's really ahead of the trade balance numbers today. At the same time, I mean, of course, the dollar yen's had a big run, and most aspects of what the new government's going to do or implement are quite well documented and priced into the to the yen at the moment. It's just testing that overnight high of 88.32. But should this trade balance number come in much weaker than expected, currently expected at a surplus of 0.31 trillion yen, then we could expect to see further yen weakness and possibly rhetoric from the officials just talking about some of the measures they want to take to bolster the economy. So the dollar yen will be the one to watch, along with the Nikkei, as obviously the yen performance really feeds into how the Nikkei goes for the day. And we'll definitely be watching some of these risk currency pairs as well when China releases its CPI numbers at 12:30. Although they also have their PPI, I don't think it carries as much weight as the CPI. It's expected to tick higher, showing a rise of 2.3%. Now, if it comes in much stronger than expected, then there's always fears that maybe the government might want to slow things down a little bit and possibly slow the taps and keep inflation under control. It's always a double-edged sword sometimes with China data. Sometimes if it comes in very strong, everyone feels they might sort of tap off stimulating the economy and try and tighten things a little bit. At the same time, if the data is much weaker than expected, then sometimes you tend to see investors feel they might take action, and this will bolster the risk space. But for now, that US dollar weakness certainly seems to have supported the whole risk space, particularly the commodities, with a strong rise for gold. We also saw a recovery in the likes of copper, silver, so it certainly seems like it might be a fairly good session for the resource space in Asia.
Now, I was going to say, what's in store for the local share market today? It looks like we might add to that 0.3% gain we made yesterday.
Yeah, absolutely. At the moment, it seems like we'll open up about 0.2% at 47.34. Now, coincidentally, from yesterday's close, the market's actually flat for the week. So that really does show how range-bound this market's been, and obviously this consolidation phase has been in place for most of the week as everyone waited for fresh catalysts to drive the market, which came in the form of China's trade balance numbers yesterday. Of course, it's a bit confusing because with iron ore pulling back slightly, we're actually calling, or BHP's ADR is actually pointing to a 0.7% drop to $37.14 at the moment. So I think the strength will probably come from some of the more defensive names and possibly the industrials that have been absolutely hammered over the past few months. So that might be sort of a mixed bag for the market at the open, and possibly wait for leads from the Japan data and China going forward. but we can expect to see some of these gold names recover after being hammered over the past few days. Of course, gold's been struggling quite a lot. We've got Newcrest, the likes of Medusa, Oceana Gold. They'll probably get a bit of a kicker, and we'll have to wait and see how the market responds to that BHP downgrade as well. If it's London listed stock by Bank of America, Merrill Lynch, downgraded to an underperformed to from a neutral, and that might carry a bit of weight for the stock today. I suppose some of the iron ore names will continue to be under watch as well, particularly Fortescue, which has had a pretty good run and has been outperforming its iron ore peers of late.
All right, thanks so much, Stan Shamu from IG Markets.
Thanks, Ingrid.
Australia's first